All right, I have Alex and DAOking here on the channel tonight with some absolutely explosive news. As you know, I was away camping with my daughter in the mountains for a few days, and while Alex was busy day in and day out building out MaxFi's support for Robinhood Chain and xStocks and testing all these new liquidity pools on Uniswap through MaxFi, I saw the text hit my phone and I got way excited, but I knew I couldn't touch it yet. But anyway, once institutions come on chain, and if the Clarity Act passes this year, yields could go nuts. And you, Alex, and DAOking have gotten first mover advantage for the community. MaxFi community is getting early access to a very early and brand new market, which I want you to dive into tonight. Tokenized stocks, commodities, real world assets being traded through DeFi liquidity pools over on Robinhood Chain, right? And some of these APRs have been ridiculously high, especially when traditional markets are open. So I'm excited to begin. And I know you mentioned this is like dividend stocks on steroids, and it brought me back because that's kind of what got me started in investing in the first place. So, Alex, I want you to walk us through what you've been building over the last couple weeks, what you've learned so far testing these positions on Robinhood Chain with xStock LPs on Uniswap, and what you're seeing so far with all these amazing breakthroughs.
Thanks, Kevin. I appreciate you having me back on your show. So, Snuggle Technology, which runs MaxFi.tech. As you guys know, MaxFi was the first liquidity manager to hit Robinhood Chain. As soon as Robinhood Chain launched, I started working on this. I've been coding nonstop since it launched. We got the smart contracts and the website working with Robinhood Chain very quickly. And because of that, our users have had this first mover advantage with the amazing capital efficiency of the Snuggle rebalancing technology to automate their concentrated liquidity positions. And what we've seen is between the tokenized stocks coming on Robinhood Chain and the meme coins over there just going absolutely bonkers right now, we have already become the eighth largest protocol on all of Robinhood Chain. We are the eighth largest protocol, and that includes all the dexes: Uniswap, Curve, PancakeSwap, SushiSwap, Symbiosis, all these huge names. We're number eight. And just for reference, PancakeSwap is number 16.
Do you want to share your screen so people can see this information?
Oh yeah,
Yeah, this is really amazing to see happening. Let me know if you can see that.
Yeah, let me add that to the stage here. Yep,
Okay.
there you go.
So this, if you go to DeFi Llama, this
Right.
is Robinhood Chain, and
Oh, the liquidity is just going up every day on it like
it,
crazy.
it's insane. Everybody's coming over here for a reason.
Yeah.
The biggest protocol is Morpho, followed by Uniswap, and then number eight right here is Snuggle,
Snuggle, snuggle,
and
baby.
that is MaxFi. So Snuggle and MaxFi are the same protocol. I created the tech. I'm the developer behind both of them. Aaron here is my co-founder on MaxFi, and I rolled Robinhood Chain support out for MaxFi first before Snuggle because MaxFi is kind of like my sandbox to move fast, so I can build quickly and get the latest features, the newest pools, the newest chains to our users as fast as possible. The MaxFi community is kind of wild, a little more degenerate, has a higher risk tolerance, and they just went in really beating this thing up for me so I can find all the little kinks and bugs, fix them up on the front end and everything, get it working really nicely, find the pools that are the most blue chip, and then I'm going to release this onto Snuggle in its perfected final form with the highest quality tokenized stock pools, blue chip stuff. But for now, MaxFi is where everything is. It's the wild west of liquidity farming. The numbers, as you've seen in our videos, are absolutely insane at the moment.
and
They're coming down slightly, but not much. And they're probably going to stay elevated for a long time. And to earn yield on a stock that you hold is incredible. Even if you're earning 10, 20, 40% APR on a stock you're holding, that's better than any dividend I've ever heard of. And especially if you're earning 100 to 600% on a lot of these, which is what we are seeing in these first 2 weeks. And in the first few days of some of these pools launching, we're seeing thousands of percent for the first couple days, wherein like MSTR launched, I launched a few days ago. And I made like 30 or 40% in like 2 days on my position. Now it's come down to like 1% a day, which is insane, right? Like, so there's a first mover advantage here. And in the MaxFi Discord server, I had our server admin, DeFi, fantastic guy. He created a new announcement channel called Pool Announcements. And I want this to be like a fair launch scenario. When I create or repair these liquidity pools that we find for these tokenized stocks. I bring them back to life using my proprietary Lazarus technology. I create the infrastructure on the chain for the volume and the TVL to flow through them. And we earn on all of that volume, on all the swap fees it generates. I want our community to have that first mover advantage where they earn outsized returns in that first day or two before everybody else on the blockchain notices the activity and floods in to try to capture it. So follow the pool announcement channel in the Discord server for MaxFi. I will be making announcements as every time I drop a new pool, I will let everybody know first, even before I create a large position on those pools. I create a $70 position on each one just to verify everything's working. Then I'll announce it to the community, and you guys can all rush in at the same time and kind of fight for that first mover advantage in a fair playground, if you will.
Yeah, of course. So, like, what? Come over to the MaxFi Discord and play musical chairs with all of us over there,
Yeah.
right?
Yes. So and the crazy thing is like MSTR and SLV, as you guys saw, a bunch of us who like after we launched those pools, the first people who scaled into them made outsized returns on both. On SLV, I made 50% in 2 days. On MSTR, I made 40% in 2 days. And then I'm doing like 1 or 2% per day on those. And when the market opens back up on Monday and trading activity resumes on
Who
these
knows?
stocks,
I'm so excited for that.
the rates are probably going to come back up. Now, not maybe not to 30,000% APR like we saw in the first day or two, but like 100 to 600% consistently is what I'm guessing. I'm not promising anything. I don't know what's actually going to
Yeah.
happen. It's all based on the actual trading activity on the chain, which is amazing as everybody's on ramping, onboarding, and buying up these tokenized stocks to try to earn yield on them in a way that's never been possible before anywhere in finance. And that is why we have provided this ability to the world with our automated concentrated liquidity management system using Snuggle Rebalancing technology to save you on all the swap fees, the slippage, the price impact, and the MEV extraction, and reduce your impermanent loss by 40 to 50% on each rebalance. It's all hands off. You set it and you forget it on your stocks, and you earn these crazy yields on them. Like Kevin was saying, it's almost like a dividend on crack or steroids. Now, it's not technically a dividend for the record, but like that's an interesting way to think about it. It's a way to get a yield bearing blue
Asset.
chip stock, a
Yeah.
high quality asset where you know your downside on something like Google or Apple. You kind of know like it's not going to go to zero overnight like a meme coin.
No.
Like you kind of have an idea, and then you just like set your range width and your rebalance delay, use a little strategy, talk to your AI agent, figure out like the volatility and a good setting, and experiment. Try different range widths. See what works best for you, and then just let it ride for
Yeah.
weeks, months, or years and earn that yield. And that's why we're the eighth largest protocol on all of Robinhood. We're bigger than Pancake Swap. We're twice as big as no, we're 3 times as big as Pancake Swap already. We're 3 times as big as Sushi Swap. We're 3 times as big as
But
Symbiosis. We're twice as
al-
big as Curve.
also, there's a possibility that a lot of people brought over their tokens over to Snuggle and MaxFi because it's a lot easier to use than LP farming on these places too. So there's a potential of that was probably happening realistically because if
Yeah.
you're using MaxFi, you have such a huge advantage over just putting your tokens in Uniswap or PancakeSwap. Your advantage against people doing it manually is like, I mean, you're like mean, you're killing them. You're a sophisticated LP farmer versus somebody doing it manually. They're non-sophisticated. They're going to get crushed.
But right, but, and at the same time, I'm still probably gonna use a protocol that makes it as easy as MaxFi. I
Yeah,
mean, first off, I have a million other things I need to be
they do.
doing
Yeah,
and managing, you know, I would usually average 8 to 10 pools at a time or so,
yeah.
and MaxFi's made it easy to manage, I don't know,
50 pools, 100 pools.
20, 30.
Yeah,
Um, I can run a portfolio of 10 and still run another 25 test positions and kind of I'm trying to actually set up into a tiered system, like run from test position to all right, let's deploy a little bit and then
exactly.
larger ones. But the point is that it makes it I think it's gonna make DeFi LP liquidity providing available to the masses. It's just too simple, in my
Yeah,
opinion, too
and we've
easy,
looked, there
and too
isn't a lot of,
efficient.
and we've seen there isn't a lot of people who LP, we'll go through the numbers, but there's just not a lot of people in the whole entire world, maybe 50,000 that are sophisticated LP providers. That's it. It's not a lot.
No, and I get it because in this business, one thing I have realized, like in my own circle, half most of my friends don't even understand crypto to begin with.
Yeah.
And then on top of that, then people I know who do understand it, they're buying Bitcoin on Robinhood or something. And then likewise, I know a few people like, yeah, I know how to use a DEX, but they're like weirded out about it or they're scared. And I,
Well,
I, I get it. I get it.
they're
You got
they're
it's
over
big
those
place.
systems are overwhelming.
Yeah.
It's a big hurdle
And I
for a lot
get
of
it.
people. Whereas here, like
It's
you
easy.
can enter a position in like 2 or 3 clicks. You go to the earn page, you just go to Robinhood, Uniswap V3, and you select your pool. Like here's S&P 500, here's QQQ, here's Nvidia, Microsoft, Apple,
It's easy.
Google, Amazon. And you can check out the contract address. You know it's the right pool. You can see the price on Deck Screener. Then you just scroll down
And
and
on top of it, people forget you do a screening before you even list these versus on the DAX, there's no screening. You could get into the wrong pool or a rug or the wrong token. Alex actually runs AI and makes sure all these are the correct. He has a whole filter set up for this.
yeah, I verify every single pool. I make sure it is the actual stock token, the tokenized stock issued by Robinhood. There are a lot of knockoffs out there that try to have the same exact name on the blockchain, and they're scam tokens. You have
Oh
to
yeah.
vet. Like other platforms don't do that. They just let anybody use their tool to just enter into any pool on the blockchain, and that's how you get rug pulled. All right. So this way, I vet every single pool, every single token. I make sure it's the right token. I whitelist every single one of these. I add them manually. I test them myself for a day before I even launch it to the public. Um, and it's so easy once you like something, like you could pick, any one of these. GameStop's really hot right now. The volume on this one's crazy. Some of these meme coins are just if you guys are gamblers, the meme coins are kind of fun. But you just come down here, you do a single or double-sided deposit. If you don't know what that means, join our Discord, but you just enter with a double-sided, pick a range width and a rebalance delay. You got some like presets here to kind of just like start out. Very simple starting point. If you have a $50 or bigger position, then it will auto rebalance your position for you. So make sure you put in like probably $60 at least at a
Yeah.
minimum to test this out and have fee compounding on because it makes the system even more forgiving. You set it and forget it, and your positions have compounding growth over time, which is really cool. And then you just click deposit and earn. You approve the tokens, deposit and earn. Now, what you guys were saying, Kevin, what you were saying, other systems, if you try to manage 48 positions, like I've got a stock portfolio here just on my stock tokens. I've got 34 of them, and we've got the new compact feature so you can see them
I, lo-
all.
I love this. I'm so glad you added this into the web page, the front end. It's made it easier to manage. It really has.
Yeah, I mean, how else would you be able to manage this a stock portfolio like this of liquidity positions, like managing 3 positions manually on the block on a decentralized exchange, takes like 10 hours a week if even if you know what you're doing. But this way, it's all automated, auto rebalance is on, auto compounding is on. I set my range width here like 4.3% wide, 4-hour delay. And look at this. Costco 0.3% is
Oh,
just doing great.
Costco is a killer, man. I'm gonna
It's a
be
great one.
doing more Costco soon.
I know, and you
Costco
and
is
you and you bringing up a way for you to make a little bit of money back from, like, the wife's trips out to Costco. That
Oh
really,
my
like,
god,
hit
my
me
wife kills my
hit me
every
just a
couple of
little.
weeks, month, wife. So I'm going to Costco. I'm like, great.
In our town, my wife goes to Sam's Club, and there's no way for me to farm Sam's Club, but
Walmart.
yeah.
yeah,
You
true.
gotta farm Walmart. I got a question for Alex real quick. You said
Yeah, go
something
ahead.
about your Lazarus technology that you reset these pools up. Is there something like I'm not a dev, obviously. I don't understand these things, but when you say there's the problem with the pool, can you explain that? Like when these pools are first set up, I assume that they have no liquidity in them. What do you do with your knowledge to get them going, basically? Like, isn't
I,
that something that Uniswap?
I'm not gonna say.
Oh,
It's
okay.
proprietary.
Okay, that's something that Uniswap shouldn't be doing, should be doing, or no?
I don't know. It so when there are opportunities like this, when you are so early to a market, as a developer,
Oh,
you
wow.
can create the rails for these markets to exist. And when you set up the rails correctly on the blockchain, it facilitates trading. And if you do it correctly, once you have it in place, it's like removing the dam. Everything just starts flowing across not just our pools, but at all the other pools
All
as
the
well.
pools.
And
Okay,
it drives volume and demand for these assets across the board. So it takes some time to do it and it takes some money on my end to do it. But once I have it done, then our users get this first mover advantage on these emerging markets,
I see.
on these amazing assets. These are blue chip stocks. I mean, it's worth the
I
time
mean,
and energy on my part to do this because I mean this up here, but look at this. This is Uniswap. Look at these. Like these just came on chain. We've
Yeah,
never had this before. We've been waiting a decade for this technology to earn yield on our blue chip stocks. Now we have it. And as you saw, I'm managing like 50 positions automatically. I don't have to do anything. I set them up. I have 50 different positions. I have like 40 positions in stocks. I've got like 10 meme coin positions. Those are just going crazy. And it's just unbelievable. I mean, even on Snuggle now, I've got 20 positions. I'm running 20 positions on Snuggle. I'm
wow,
running 50 positions on MaxFi.
crazy,
You
dude.
can't do this anywhere else. Look at this. These are all hands off. These are all dialed in by Agent Max. And I mean, this is incredible, and it minimizes impermanent loss. You guys, if you've been following us, these are the Agent Max Optima and user friendly settings on like the top correlated accumulator pairs on base chain. This is like the most solid crypto LP strategy ever created to minimize impermanent loss and just grow and accumulate a portfolio while spitting off passive income to your wallet, all automated and hands off. And then on top of that, now we have tokenized stocks. So now I've got my stock portfolio growing over here. I'm just moving more and more over as these become established and I find the ones that I really like. And look at this 48 active positions. You can sort them by stocks. My altcoin positions are doing great on virtual. My meme coins are just like kind of absurd. If I go to APR, I just opened up this new one. So here's I'll give you guys a little alpha.
yeah,
We
let's
just
check that out.
we just opened up HMM token. It's pronounced and it's for thinking cat. It's a little cat that's thinking. It's a meme coin, no utility. It's just nonsense. But I opened up this position like 30 minutes ago on I put 80 bucks in here as my test. I've almost made $1 already. The numbers are insane on this. Now could thinking
On a
cat
40%
go to
wide,
zero
right?
overnight? Yes, it could. Be careful on these. I
Of
have a
course.
40% wide range, but like we just added this. This is one, and I vet each one of these very methodically. I go through the smart contracts of each one of these tokens, and I verify there are no owner controls to mint more of the tokens, to rug pull you, or anything like that. So I have vetted these tokens here, and I've also looked for meme coins that have a good distribution of the supply. So the supply is not consolidated in one or two large wallets that are doing wash trading and pumping and dumping on their communities. These ones are pretty decent in those regards. Not perfect. Anything could happen. These could be total
Right, of
gambles,
course.
but also these could ROI in just a few days, like some of my other positions, like YOLO. I put in like 60 or $70 maybe, and I've already made $72 on it in 3 days. Like swole doge. What is that? I don't know. I don't it means nothing, but like I've almost ROI'd on it. I put in $65 or so, and I've earned 51. Now these are gambles, you guys. So
Of course, and I wanted
yeah,
to interject for a minute. Like, there's so much change happening all at once, but what surprised you the most during this first couple weeks of implementation of positions for the Robinhood chain? That were just big surprises to you as the dev, you know?
I would just say the voracious demand for what this blockchain has to offer. It kind of reminds me of when Base launched, and I mean that was Coinbase launching their blockchain. Everybody knew Coinbase. So it was very trusted right off the bat. And we saw a fervor of activity, a flurry of activity on that chain. And people were making money hand over fist in the initial few months and even the first like year and still going. Like I'm still making a bunch of money on base chain, as are most of the people on MaxFi and Snuggle. But now Robinhood has been around for what, 2, 3 weeks? And we are seeing this fervor of activity again as all the capital and liquidity flows onto the chain. Now, think of this in water terms and analogies. Liquidity, pools, flow, okay? That is how we make money. We provide the liquidity, we provide the depth of the liquidity in these pools for the volume flow to flow through. And whenever the flow goes through our liquidity in the pool, we earn a small piece of it. Essentially, we are the market makers here, and we earn a small fee every time someone swaps or trades in our pools. So think of it like being a fisherman. All right. You are in a pool of water, you cast your net, and we're early to the school of fish arriving. We're the first people out there who have cast our nets, our liquidity positions. These fish, let's call them swap fish. These little swaps, a whole school of swaps comes flowing through our net. We capture a bunch of that, and that is our yield that we take home in our wallets or compound back into our positions. Now, eventually, a whole bunch of other fishermen are going to come in and drop their nets. People are going to come in and bring massive nets. Institutions are going to come in with their trawlers and try to scoop as much up as they can. But we're so early that we're just like pulling just money out of these pools, just like hand over fist right now. And this first mover advantage can last for months. And on tokenized stocks, it can last probably for years because this is a brand new emerging technology market.
It's amazing. I mean, truly, I've never been this excited, even with all the things I've seen built within the DeFi space over probably the last 3 to 4 years. And I'm so excited to see what is going to happen with MaxFi on the Robinhood chain once the markets open back up on
Oh, yeah, that's
what
the thing.
like in just what not too long.
No, about 12 hours from now.
Yeah,
Well, a little
12
bit less.
hours. Right.
11, well, yeah, about 11 hours or so.
But
But the reality is all these APRs were during off hours. So we don't even know. There's no data for this stuff. We only had
yeah,
like one trading day, really, and the
Yeah.
APRs were crazy. So like we don't know what's gonna happen. So we'll see. It's gonna be interesting.
I mean, it's crazy because I was not able to establish any positions until pretty much around like Saturday, and you're still getting over the weekend.
Crazy
I've
APRs.
been averaging 120% on silver, 152 on SpaceX.
Wow.
Um, I'm trying to see some other ones here.
After hours on the weekend.
On the weekend, that's correct. Now, the Wrapped ETH MicroStrategy, yes, that one was crazy, but it's dropped down quite a bit. But still,
Yeah,
it's not
that will that
100%.
that one's going through a little bit of a pain because what happened there.
And I think that should be talked about a little bit. There will probably
Yeah,
be some questions in my own community.
yeah, well, that one you saw the demand for MicroStrategy stock went through the roof, so there wasn't enough liquidity, and it set it like literally 30% above what it was worth. So it's going to come back down. People will lose about not the full 30% because it's with wrapped ETH, but they'll lose like
Yeah.
15% of the value. But because of the APRs are so high and they'll probably stay high, they'll they've probably either made the money back already or they'll make the money back depending on when they bought
And
it.
that's what I was even looking at my own positions, and I had broken up between like 3 or 4 different positions that I don't have now. But those 4 or 5 positions printed at least. I'm trying to quickly do the math in my head. Around 40 to 50% of the loss was already taken care of.
Yeah, and then over time, that position will obviously become a big money printer and compound.
Exactly.
And it's really a no brainer. You just got to make sure when you buy these tokenized stocks that you buy them at the market price and don't
Yes.
overpay for them. Make sure to go check what the price is, then make sure you're paying close to the market price. I did overpay for my MSTR by like a dollar or two, and I
I
did.
paid a dollar or two, maybe a couple
Yeah,
dollars extra, but I made it back in yield in like a
yeah.
day or two.
I made it back, and then I've been overpaying for pretty much everything just because there's so much demand. I've overpaid for my Netflix. I overpaid for my QQQ, my S&P, but not by a lot. I'm talking like under 1% in most cases.
Right,
So,
right.
so there is some, when you see the APRs are 500%, 300%, 200%, you're like, well, I just need to be in this position for a day or two. I'll make it back. So that's the logic that I had when I went into these. So you're going to overpay at least for now, but I think in the next week, most of them will track
Yeah.
pretty closely to what they're really worth, and then there won't be any
Yeah.
overpayment.
Like
And I agree with you all that like you're gonna once that kind of equalizes, you're gonna see these yields that are probably gonna average anywhere from 100 to 600%, which is absolutely
Yeah,
nuts on assets like
I think long term that's where the yields are, because if you really look at it, what are the yields if you own ETH with USDC? What is the yield if you own BTC with USDC? Well, they're anywhere depending on your range from
right.
100% to 300%, and we're many years into crypto. So the yields on these are probably going to follow a similar trajectory where you're between 100 and 300%. Some maybe a little bit higher, some maybe a little bit lower, but generally, I mean, you're going to own a stock and you can turn into a yield bearing asset. I've never heard of such a thing.
And I was gonna say, like, and just pivoting a little bit, like looking at my test positions that were the crazy DGen meme pools that you put up, Alex. They were, you know, some of them were getting eaten up by churn. I was experimenting, like I had somewhat, I did some narrow ranges, like 10 to 20% kind of range. And over the last 48 hours, they were massive wrapped ETH accumulators. Oh my, like I open up my wallet and I'm like, wow. And basically all the churn was paid for in ETH back into my
Oh,
wallet.
that's
Well, excuse me,
amazing.
not back in my wallet, but if you compound it, what was in the wallet and what went into the position, which I do keep up with on my tracking system, but um, what the position made more than paid for the loss, especially with Jaggernaut, which
oh,
rebalanced way too many times.
Juggernaut is crazy, man. YOLO, Juggernaut, those tokens, tendies. I don't even understand. It should
Yeah.
be illegal to give these type of
Now,
percent.
Chindy's paid for itself really quickly, like really quickly. It's
Mine
almost
too.
it'll be paid up probably if the price doesn't like drop heavy, it'll pay for itself in less than a week, probably 4 days.
Mine's 50% ROI so far, my tendies one.
So you guys really, if you're in these for like a week and you do it right, it's hard to mess it up. and that's why you want a liquidity farm versus owning and taking a risk on a token. Because
Yeah.
like you can own the
And your
token,
system makes me take profits, pretty much.
It
right?
forces you to extract the ETH from the pool from everybody else trading. You just are
Right.
constantly taking ETH out and storing it in your wallet. Whereas somebody else buys a meme coin and they just like sit there and pray and say, I hope this goes up 100x. And then if it goes to zero, well, it's a complete loss. But if you're
Well,
earning the entire way, and then you ROI and break even on it. It's just a free money printer at that point. Now these are gambles. We don't know which meme coin's gonna succeed or not. These are based on narrative and marketing and attention and all that.
of course.
But and we don't know the optimal settings yet on these meme coin pools or even the stock pools. We're all figuring that out collectively as a community. So share your positions. Let people know what strategies are working great for you. I know on some of these meme coin pools, I've got 100 or 200% wide positions that are doing fantastic with long rebalance delays. So they have very like almost no impermanent loss and just pure fee harvest. So try out different things. That Russian doll strategy we teach in the community, and that the UIG, the Underdog
Yeah.
Investor Group, they teach the Russian doll strategy too, where you pick a pair that you really like the same exact pool, and you open up like three positions on it, one tight range, one medium range, and one wide range. And you let the auto rebalancing system just take control of them. And you watch those three positions and you see which range setting over weeks performs the best with the least amount of impermanent loss. And maybe that's your ideal setting that you scale into. So there are so many ways you can play this, and the system
So
itself
many.
is so capital efficient. It's very forgiving compared to other rebalancing systems. So experiment and have fun and share your results in the community. It'll help a lot of people.
So there is a few
That'll be
people in there is a few people in the system that are doing some crazy things that I personally wouldn't do, but I can see why they're doing it. There are people that are putting tens of thousands of dollars into meme coins, and I know what they're trying to do. They're literally trying to ROI in a week or two. And honestly, I'm looking at their accounts. They might, but we generally don't recommend this kind of insanity. But there are some people that are going for it, and I understand, and I could be wrong. Some of these people are probably going to make some nice money, and they might. What I think they're trying to do is, let's say you put in 50 grand into these meme coins, which you should not do ever. That is financial advice. Do not ever do that. But there are people that are doing this, and they're literally trying to ROI back in 10 days and then keep it probably running and just make it a massive passive income stream for themselves. I think that's what they're trying to do. I don't recommend that, but that is that is a strategy that I've seen a couple people do. I think they're slightly crazy, but I've also seen this work here and there, not all the time. It might work here. I can't say it won't work here just because it's like, I don't know, Robinhood has got a lot of money flowing through it. So as that money comes through, it's kind of keeping these meme coins going too. So, but again, you're playing kind of Russian roulette. One day, that meme coin that's been printing for you might stop. So we don't know.
Yeah, stop, and then also
Yeah.
the token drops 65%, which
Yeah. Oh,
it
80%.
won't drop 65% for you, but that's still gonna be a good 40% loss of your capital almost, maybe overnight.
Yeah. And
Yeah.
that's,
So you definitely have to play that game.
yeah.
Understand what kinda game you're playing.
And run like, and if you run a wide range on that, like even if it drops that far and you just kind of like, if you have like a 50 or 100% wide range and it drops that far, it just snuggles down a little bit, maybe even not at all. If you have a rebalance delay on there and the price just rebounds in the next few hours or days, and you're back in the money with zero realized impermanent
Yeah,
loss.
mhm.
Um, which
Well,
is
this,
what I'm doing on a lot of these meme coins right now, running super wide ranges. And even then, like if something pumps 300, 400%, you've got 100% wide range, you want to wait for it to just pump and then come back down and then only snuggle up a little bit. And then it comes back in your range. Very little impermanent loss that way compared to doing it the old fashioned way, swapping your tokens, trying to chase it around. I mean, this is incredible. Since we've been talking, in less than an hour, I've already made over 1% return on that thinking cap position. I'm over 1% in under an hour. Like I'm doing 1% per hour on a 40% wide range on a thing called Thinking Cap. Okay, HMM token. I just added it, and it's just going nuts. But the real so that's the degen fun stuff that Robinhood is like. It's like the new Solana. You remember when Solana launched Pump.fun on Solana?
Oh,
And
yes.
everybody was trading meme coins over there. Some people were making money, some people were losing money, but it was generally a fun, degenerate kind of time in crypto. And the amount of volume and money flowing through Solana and pumped out fund tokens was massive, and the liquidity
Yep.
providers cleaned up.
And by the
That's
way, like that
yeah,
was when I was really dabbling and like I'd already gotten into LPing, but I was only doing 50-50 kind of, V2 ranges, right? I think, yeah, like kind of like the older version of Uniswap. But then I started learning about concentrated liquidity, and I really started experimenting with that on Orca, on the Solana blockchain. And there was when Pump came out, I was randomly selecting high volume coins that were about to graduate out of Pump and farming that with Solana, wide ranges. And when it went out of range, I just took my soul profits along with all the yield. It worked really well until it didn't, you know. But
Yeah. I mean, you
so you
you bring
definitely
up
have to follow the market and
yeah,
definitely follow where the volume's going to, et cetera. But
you
yeah,
bring up
if you want to
something
play that game, MaxFi is a great system that will
do that,
give
yeah.
you a little bit of leeway if you do want to play that
and
degenerate
I am
game.
personally vetting and whitelisting the tokens and pools. So I'm looking like Pumped Out Fun had so many rug pulls type tokens. Like they just immediately dumped on their community. Um I'm doing my best due diligence. It's not perfect, but like I have multiple weighted factors for each one of these out of 160,000 meme coin pools already on Robinhood Chain in like 2 or 3 weeks. 160,000 pools for meme coins. I have found 12 meme coins that meet my criteria that I would actually dabble in as a liquidity provider. And that's the kind of stuff that we whitelist. And as more of the higher quality setups appear, those are the ones I'm going to try to add to the system and just avoid the rest of the noise that everybody else like they don't have the advanced strategy and analytics and backtesting systems that we have with Agent Max, which I have now retrofitted to work with the meme coin market on Robinhood Chain, which is going to be coming out to you guys week by week as I'm building as fast as I can. Um, but I kind of want to redirect the conversation back to stocks because I think that's the real opportunity here. The meme coin stuff's super fun. Don't get me wrong. Like if you got 50 or 100 bucks you want to play around with and dabble, try it out. But the stocks, like gonna be scaling in my stock portfolio onto Robinhood, and I'm going to be looking at the market prices of these tokens. I'm going to be buying them at a favorable price, around market price. And then I'm going to be opening up liquidity positions on them on MaxFi and eventually on Snuggle as well. And I'm just going to let my stocks sit there and grow and earn a yield and have a giant yield bearing portfolio of high quality blue chip stocks. And nothing like that has ever existed before. And I just want to ask Aaron, because I know you're like a really high level investor and market analyst. You've been investing in stocks and analyzing them a long time on your YouTube channels. You've got multiple channels dedicated just to stock market analysis.
Right.
What are your thoughts on this new technology in these emerging markets?
So, first of all, when you own a stock, there is no yield generally, unless you own like even a Microsoft will give you like a 2% or an Apple, you get 2%. By the way, I know people that live off the yield they get off the S&P. I have an uncle who's been buying the S&P for decades. He's never sold it. He's probably got close to $1 million worth of the S&P. This is a gentleman. My uncle is one of only 300 PhDs. He's worked for Silicon Valley companies. He's just recently moved back to LA for most of his life. He has a PhD in something that I don't even understand. So this guy, I've had him explain it to me like 3 times already. I've given up. So he has about $1 million in the S&P, and he literally lives off part of the dividends that he gets from the S&P. And it's not very much. It's like, I don't know, it's like 15, 20 grand a year, something. I think it's a little bit more, like 30 grand a year. It's a
It's
couple
like
grand.
3% dividend on SPY.
Yeah, on the S&P, it's
Yeah,
somewhere.
yeah. It's like he has a little bit over $1 million, so he's earning like I think about 4 or 5 grand a month, and he's literally taking that money. He doesn't work anymore; he just does consulting. He takes that money and he pays for his expenses. And I'm like sitting there going to myself, he can't do anything with the SPY stock that he owns, the S&P stock he owns. It goes up in value every year, and it gives him a dividend, which is fantastic. But imagine if you could take $100,000 of that, turn it into an actual yield-bearing asset while you become the Jane Street of liquidity for those people that also want it. Because basically what we're becoming is Jane Street. And if very few people know, Jane Street is the most profitable company on Wall Street. They made $40 billion last year by providing liquidity. We are
They're the
now,
market maker.
they're the market makers. We have now the opportunity to become the market makers. So once you become the market maker of an industry, your earnings are outsized. So now I can go to my uncle and go, listen, I know what you're doing is great. Keep your $1 million in your S&P. Take $100,000 of it, bring it over here, put it into SPY 50% and USDC 50%, and earn a 50% yield. You'll make more on this than your entire $1 million that you have sitting. You can
Yeah.
literally turn your $100,000 into $50,000 in cash. You can out earn the other $1 million that you have. And that's a play I think a lot of people will start doing. And that hasn't even started yet because we're just starting to educate people on this potential.
And it auto compounds.
And oh yeah, I forgot about that. And it so you're getting more SPY. So like he has to go literally work, pay taxes off his money, go and buy more S&P. Here, you're literally getting more S&P given to you as you auto compound back into your wallet. I mean, it's magical in ways. And I think it's revolutionary in that a lot of people haven't discovered this, but once they do, this is the future of investing. And I think we're talking about something so early that in 5 years from now, everyone's going to be like, this is what you should do. But right now, we're so early, no one's figured it out. I think this is going to be a multi-year process. And the people that are doing this now stand to gain enormous amounts of wealth.
Yeah.
I mean, that is a story that is quite, I mean, I I am lost for words, and I'm gonna be honest, it comes to your last AMA, and you were talking about how someone could take their wrapped ETH, buy the stocks on Uniswap that they, have conviction, or the companies or the ETFs, whatever, silver even. But they are able to do that with their wrapped ETH, buy those assets, provide liquidity on MaxFi, sit back, and it passively creates a portfolio.
Yes.
I think you were talking about this, DAOking. And
Yeah.
what I was curious about and what I wanted to discuss next was for for a user out there who may be listening, who has a smaller size portfolio. And both of you can answer if you'd like. What to you would $1,000 portfolio look like on MaxFi? Not financial advice, of course. This is not a copy trade portfolio. I want to understand the decision making process. You would have allocations or just positions.
Let let me start off by saying, Aaron, will you share my screen? If I only had $1,000 to start my portfolio with, first thing I would do, I would click the refer tab.
Yep.
And I would copy my referral link and I would tell all of my friends and family, guys, you can now earn yield bearing stocks. And you will earn 3% of all of their trading fees forever on their positions. If somebody goes and puts you have a friend with, like Aaron was saying, he's got an uncle, $1 million in SPY, and he wants to put $100,000 in here and make more on his yield than his entire $1 million in SPY. Okay, he puts $100,000 in here. You earn 3% of his yield on that forever. So now my $1,000 that I'm starting with, I might be earning a couple hundred or even a couple $1,000s a month just from referral commissions. Then what I would do is I would come in here and just start building out my stock positions. And I would be going blue chips, well diversified. Aaron, do you want to talk about how you would allocate a stock portfolio once you have all your referral commissions coming in and you're like, what do I do with this?
I mean,
And
again,
those, oh, by the way, that referral commission is paid in the tokens that they've actually earned. So in your uncle's case, like if I referred your uncle and he put $100,000 into the SPY S&P 500 with USDG, which is dollars, I would be earning 3% of his yield as SPY tokens, S&P 500, and USDG, US dollar stablecoins. Every time his position rebalances, which could happen once every few days, I would get more SPY and more USDG that just appears in my wallet. And
right.
so every month I might be getting a couple $100 of SPY tokens and dollars to my wallet passively just for referring a couple of my friends. Anyway, go ahead, Aaron.
Well, again, it depends on what you're trying to do. If you're just trying to make passive income or you're just trying to go for maximum gains. So it really depends on the person, if they're younger or older. So that's something I'm not a financial advisor. That's something you have to take up and think about yourself.
That is
But
correct, of course.
what I would say is this: I would look at stocks. For example, Netflix has fallen a lot lately. And that's what I do. I look at stocks and I go, okay, which one hasn't really pumped? Costco hasn't really gone up too much. It's been very stable for the last few years. I like it because it doesn't move around too much. Netflix has had a big drop. Okay, I like that too. Had a big drop. It's solid. I don't think Netflix is going to go anywhere. It's growing, but it's not growing as fast. So you got to do a little bit of research. You can't just go into things willy-nilly. You got to do a little bit of research, and then you'll pick out your top stocks. Is Microsoft going to continue? Microsoft has come down a little bit. It'll probably do okay now. Is Nvidia or Apple? Apple, I really like. Apple's the one I think isn't going to really fall too much. It's not going to really go up too much. Perfect for liquidity farming. So you got to pick the ones that you feel comfortable about. So I would pick a portfolio of about 5 of these. I would go $200 each in each one. I would do a little bit of Apple, do a little bit of Netflix, I would do a little bit of SPY. I would a little bit of the QQ. The QQQ is a killer. If you earn 150 to 250% on the QQQ, absolutely kill it.
Oh my goodness.
Yeah,
Kill
and
it.
I saw those percentages on your all's last AMA, and I
Yeah.
opened up positions on those in the weekend. There's no volume there, so like the APR right now is sitting at like between around 10%, I would say. Over the weekend, I'm kind of excited to see what those will look like this week, especially like it's looking like they may open up like not as much conflict in the Middle East. Maybe that drives oil prices down, stocks prices up, just maybe in the near term. Not that it really matters, but I just want to see how these, especially the ETF ones, perform over the next week or two. Thinking
Yeah.
of like core portfolio positions and things like that.
Yeah. And this is another thing that people don't think about. When you're liquidity farming, like you said, you don't really care about the price. So like if Costco doesn't go up for the next 5 years, I don't really care. But if it does go up, you still do get some of the upside, which is beautiful. So even if Netflix doesn't go up as much as you think, or Apple doesn't go up as much as you think, or Nvidia doesn't go up as much as you think, we don't really care. We're here to liquidity farm and get those fees. And that's the beauty of what we're doing versus owning a stock. We know we're going to get paid on this, on the trading volume. So that's really what I would do. I'd split up into about 5 positions, $200 each. I would just let it go. I would close my eyes. And like Alex said, go put the referral code, earn more fees, take those fees, compound it. You only got $1,000. Let's say you make, I don't know, every $100 that you get in your wallet, compound it. That's what you do. Every $100, compound it. Put another stock, find another one, and then just build out this portfolio. So your $1,000 over time can become 2,000, then becomes 4,000, becomes 8,000, and you can just like compounding is the biggest friend you have. You just keep letting that thing compound, keep getting those referral codes, keep getting more money in there. And one day, two, 2 years, I would say about 2 years is about what we've seen it can take from the numbers we ran. You could be your $1,000 portfolio can be between $8,000 and $15,000. That's the numbers we ran on these numbers. So that's how fast it can go. It's not going to happen instant. It's not a meme coin that happens overnight. It's a slow, steady, daily churn. And it's not something you need to even look at. I mean, I went on vacation for almost 2 weeks. I didn't even look at it. I didn't take my wallet with me or nothing. I didn't know. I didn't care. I don't trade. It's just sitting there. It's compounding. It's doing its thing. That's the
Right.
beauty of liquidity farming.
One thing about compounding, if you guys use any of the compounding calculators out there and you're looking at traditional dividend stocks that pay quarterly or yearly, you get paid that dividend, say once a year, and that's your compounding event. If you use a compounding calculator, go on Google and search compounding calculator. There will often be an option for compounding frequency.
Right.
You can if you put in the same stats, but you compound once a year versus once a quarter versus once a month versus once a week versus once a day,
Day.
which in a lot of these positions, if it just slightly rebalances you, very little rebalance once every day or every couple days, and you have 8 to 20 compounding events a month, every time it compounds, your position grows a little bit, and it earns more. It's a bigger position now. It earns a little bit more, a little bit more. The compounding frequency really just it has a crazy effect on the growth trajectory. So that's something also to keep in mind that a lot of people don't think about.
So I wanted to. Oh my gosh! Hold on a second.
What happened?
I'm having a
Kevin,
lighting problem.
Kevin's in a rave right now. He turned on the strobe lights.
Crap. Not worried about it. All right. I'm gonna just have to cut all that out. But
No, turn on the disco ball. Let's keep it going. This is great.
but I know that. Oh, and most in my community know that this story is not just about SnuggleFi, and it's not just about MaxFi. And it's not even just about Robinhood Chain for that matter. But I know that the ecosystem can be kind of explained as the SnuggleFi technology layer, and then you have, excuse me, the MaxFi infrastructure layer, and then the Agent Max intelligent layer, right? At least that's how I think of your ecosystem. And is Agent Max already learning from these Robinhood chain positions? Is that something that's still developing right now? Are there going to be Agent Max reports? And then I'd like to kind of segue into any Agent Max updates kind of towards the end.
It's just a preview that Agent Max and I have been nonstop as soon as we've been getting this data, building out her information, her back testing, her strategy, her portfolio allocations for tokenized stocks. And what I'm looking to do, because Robinhood Chain came so fast and furious, and the opportunity is so huge here, I went through all the numbers with Agent Max and our base chain accumulator correlated pair strategy. Long term, especially at this point in the crypto market, it does have the biggest upside potential of just anything else, hands down. Right.
Right. Oh, yeah.
Positioning right now in that setup for the coming recovery out of the bear market into 2027, all the way through 2029. Biggest returns we're probably going to see, not financial advice, but that's our plan so far. But I ran the numbers on a lot of these pools and the volume and the on ramping of all of this liquidity and capital on a Robinhood chain into the tokenized stock pools. And Agent Max agrees that the opportunity cost is too high to pass it up right now. So when I am deploying her positions, I'm going to be doing a 50-50 split. Half into our accumulator correlated pair strategy for pre-positioning and accumulating crypto tokens, blue chips and everything going into the bull run, and then 50-50 into a tokenized stock portfolio that the returns, they're just paying so high right now. And they're blue chip quality assets. So like the downside is kind of measurable what the drawdown on any of these tokens would be. So the yield is just so outsized, like it is just so huge right now that I'm going to be deploying a portion of her capital onto Robinhood Chain to take advantage of this opportunity for the next couple months. And then I'll just give you the secret sauce, the playbook. I'm going to be printing as many stocks as I can right now in cash and ETH from these tokenized stocks. I'm also going to be doing the accumulator correlated pair agent max strategy on base chain that we've all been talking about with the Optima and user friendly settings and all that. I'm going to do these both side by side for the next few months. And then come October, November, I'm going to probably be moving a lot of the stock positions. I'm going to just close them up, probably take profit on them, move them fully 100% and go all in on the accumulator correlated pair strategy because coming out of the bear market, let's say we have the crypto winter ends right about October, November, December, somewhere around there. And then we go into crypto spring, as Aaron always says, crypto spring. The returns, and it's like one of the easiest plays in my mind to see on the charts. It's a repeating fractal pattern every 4 years with the crypto cycle. Like it's like clockwork. It's one of the easiest plays I've ever done. So in the past. So I'm doing the same exact playbook with Agent Max. I'm going to be taking all this crazy yield. Hopefully I can earn and maybe an extra 20, 30, 40, 50% from the outsized Robinhood returns right now on these tokenized stocks, roll those into the crypto positions in the winter and then ride the entire thing up with a bigger starting bag than we had going into 2027, 2028, 2029. And then also, I don't know if we want to talk about this, you guys, but we might have something else coming to really take advantage of the tokenized stocks. Aaron, do you think we should drop any of the secret sauce on that, or should we leave it for a later discussion?
Depends. How far away is it? Because people are gonna be asking.
That's that's true. I mean, you know us, we move fast. Um, I would I would say we could probably get something up in the next 2 months, like
2 months. Okay.
something like
Then
solid.
then you should wait before we tell people because
Okay.
people have
And
a
it,
hard
it
time
can be
waiting.
something that everybody in the communities can look forward to for the next year.
Right. I think 2 months is a long time in crypto. That's like 5 years.
Yeah, it's not the traditional.
People can't wait. They're gonna be bugging you. They're bugging me. They're gonna be bugging Kevin.
And Dave, Phi, and Vector, and
So let's
Plain.
not let everyone get bugged. We'll just say that something exciting and fun is coming.
Yes. And it's and part of that is it involves Agent Max's informational and strategic layer, which it takes some time to build out the backtesting system on these younger pools. Essentially, I need more data, but it will help us find the optimal settings on tokenized stock pools, and that data, as we get it, we will be leaking it out to you guys to try it out for yourselves as we find those optimal settings. But I mean, these are printing so much money right now, and these stocks are barely moving that like in anything, basically anything I put money in right now on Robinhood Chain on MaxFi is just making money. My portfolio just keeps going up, and it's the yield is like unlike anything I've ever seen. And I've been liquidity providing for a long time, so it's just amazing.
More so than when Base Chain came out. Like, I mean, I hit that kind of late, but I remember getting some crazy yields on Aerodrome
Oh
and
yeah,
farming rewards back during that time.
it's the exact same situation as we're seeing liquidity flow onto a new chain that's backed by one of the biggest companies in the world with the most name recognition, especially in stocks and crypto. So everybody's hearing about it. Everybody's excited about it. An incredible amount of money is on Robinhood, the app and the brokerage in terms of stocks and crypto. And as these people realize, hey, my stocks and my crypto that I hold on the Robinhood app on my phone in their brokerage, you're saying I can on ramp that to the Robinhood blockchain and put that into MaxFi and earn these yields that are 50, 100, 600% right now and will probably be like that for who knows how long. That is why the opportunity is so huge right now, is all of that liquidity flows on chain, and everybody trying to buy those tokens are buying them from our liquidity pools, where we are in range providing the liquidity and earning the swap fees on MaxFi, and it's all automated by MaxFi to keep you precisely in the optimal spots to keep you as close to in range or in range as possible, while minimizing something called impermanent loss that happens during a rebalance event, while also completely removing the swap fees that everybody else pays, but we don't, the slippage, the price impact, and the MEV extraction, which in a lower liquidity, new environment like this, when a new chain launches with new tokens and new pools, slippage and price impact and MEV extraction is bigger than you're used to on something like base chain or Arbitrum. Now, with MaxFi and Snuggle Rebalancing technology, you don't even have to worry about that when you're rebalancing your concentrated liquidity positions, which MaxFi handles all for you, completely removes those hidden costs, reduces impermanent loss by 40 or 50% on each rebalance, and just keeps you perfectly positioned to have the price just keep coming in and out of your range, earning you those swap fees over time. And that's on Apple and Microsoft and Google and Nvidia and SPY, the S&P 500, and QQQ and Silver Shares ETF Trust. And soon we're going to have gold ETFs. We're
Yeah,
going to have
I'm waiting for that one. Maybe
we're
it
going to have
puts
we're going to
uranium
have
up.
USO. You mentioned oil earlier. We're going to have USO coming on very soon. I'm building out the rails for USO as we speak. So hopefully in the next few days, you guys can get some oil exposure and earn yield on it. So the possibilities really are endless with
Endless.
this technology, and we're the first movers here. The first concentrated liquidity management system on Robinhood Chain. We're the eighth largest protocol on the entire Robinhood Chain right now, which is a really incredible thing to see happen. We launched this like 4 days ago, 5 days ago. It is. I don't even think this has been here a week yet.
Nope. I
Um,
don't think it was 5 days ago, dude.
it was four. I don't have any positions older than 4 days.
Was it really 4 days? Feels like it was, like, less than that, but you might be right.
I know that we were in the middle of about to go to sleep at camp, and I don't have cell service, but I did have my phone with me on this vacation, and, somehow I got a little bit of data service and, like, a bunch of stuff came through on the Discord, and I was like, "Holy shit." Because they are farming MicroStrategy and wrapped ETH for this kind of percentile right now. Oh
Yeah,
my goodness.
3
It was
days
it
and
was too
11
much.
hours ago.
3 days and what?
3 days and 11 hours ago is my
Yeah.
oldest
So
position so
really
far,
so so really just 3 days ago. It's nothing.
and I haven't really slept since then or before that.
Well, I mean,
I haven't
I've been
slept in, like, 2+ weeks, you guys. I fell asleep on the floor for, like, 10 minutes at, like, 6 AM. I just get up, I just keep going, and that's why we're here first, though, so
well, I mean, I was trying to tell my community and giving you all the props in the world. I'm like, he's been working day and night, 2 weeks straight trying to roll out Robinhood Chain, first mover advantage for everyone. I mean, you can't ask for stuff like this with a
Right.
project that's bringing that kind of alpha out just to their community. It's like creating a flywheel, creating a system that's benefiting all in a way, you know.
Yeah.
That's something that you just don't see it a lot in the crypto space, in my opinion. You don't.
It's one of the coolest things I can bring to our community is this opportunity, and if it requires me losing a few weeks of sleep, it's not a big deal. I'll sleep later once everything is set up, and I'll let you guys kind of manage the community for a few days while I recover. But in the meantime, I'm getting these pools set up, dialed in now. So we're gonna have more and more blue chip stock offerings on here. And from Robinhood, they're the ones issuing the stocks, and we're just a tool facilitating the management of the liquidity positions for those tokenized stocks. We are the market makers now. Every one of us in our community is now a market maker on these stocks at a retail level, never been done before. And it's all automated and hands off. So even the layperson can kind of get involved now All they got to learn how to do is like download MetaMask wallet and on ramp some funds from their bank account using there are a million different things. You can use Coinbase, you can use Kraken, whatever. Like, you can even on ramp straight through MetaMask wallet, I think. And then all you do is you go over to MaxFi and you go to the Robinhood chain and you open up a position, test it out, 50 to 100 bucks. Try out a position, do something really simple and blue chip like S&P 500, QQQ, something you'd be buying anyway, and just pick a random range with like S&P 500, 4% wide is what I'm testing it with. It rebalanced at all, and it's just printing. So it's awesome to be able to create something like this that allows people to take advantage of this technology before the rest of the world shows up. And that's where that first mover advantage is. And I want us all to have that opportunity to take advantage of it.
Well, I mean, I really appreciate that both of you all took time out to have another conversation with me and my community. These, if they actually sit there and watch and take notes, I think a lot of alpha, a lot of good crypto education and DeFi education is presented in these discussions, in my opinion. And again, just a big thank you to both Alex and DAOking for helping me and everyone else out there understand MaxFi better and the addition of the Robinhood chain and xStocks with the LPs that are, that you are Lazarus, raising from the dead on out of Uniswap. And that you're doing that for the community that you all have built that so that we can benefit from the first mover advantage. And for that, I appreciate it. But and I also would call on anyone out there, go follow Alex, go join the Discord, follow myself, Dad's DeFi Space, the free Telegram. I want to get the word out. I know you two want to get the word out. And you can also learn more about MaxFi using any of the links in the description. And I hope to see you in the Discord. I really do.
Thank you, Kevin. We'll see you soon.
And I just want to say real quick, thank you, Aaron and Kevin, for helping educate the thousands of users we have now. It's a monumental effort, and you guys are educating our users and bringing them up to speed at scale. And I am really grateful for that. So thank you.
And on that note, and I wasn't going to talk about this, but you just brought it up, is I am in the process and about 50% done with building kind of a onboarding MaxFi course. I've gotten the first couple modules done, but I haven't built out the MaxFi actual modules yet because it's going to go from like taking it from the bank account all the way to establishing and managing the positions and everything in between. It's just going to take some time to build the other rest of the modules, but I'll
Are
get
you
that out
are you going to charge for this?
there. This has been my free course,
Oh,
so I'm
Wow.
definitely not charging for the first 2 to 3 modules, but I'm still in the process of building the advanced DeFi module and then the actual MaxFi positioning and management module. Haven't thought about those yet. I've kind of
right.
mapped it out, but I've only made it through the production process of module 1 and 2, which honestly were revisions of my free course
I
with new
mean, you're,
content.
you're giving out some, you know, knowledge. I think that a lot of people would probably be more than happy to pay you for, or especially if you do any one-on-ones with people. I think that would really help some of the larger accounts and so forth. That's great. It's great news to hear. Really
Yeah,
great.
yeah. I mean, time, of course, but yeah, that's going to be something that's going to be built out over the next couple months.
Exciting.
And if you're offering that for free, um, and you've got a referral link for MaxFi in there, and anybody who's learning, if you're watching this right now and you get a lot of value out of the materials that Kevin's putting out, go ahead and use his referral code. Give back to him. It costs you nothing at all, and it goes and supports people who are out here putting out educational content for free that is of an immense value when you learn these skills, and you can make an entire living as a
Oh yeah.
liquidity provider And if you know what you're doing with a tool like MaxFi or Snuggle, it's like you set it up and then you forget it, and it just passive income on autopilot.
Absolutely. Amazing, guys. Thank you all for this.
Well, thank you all. Take care.
Thanks, guys.
Take care, guys.